we have heard many people agree with the fact that perhaps it's time for the Fed to pause. But have we seen anyone actually call for rate cuts aside from the president?
Well, actually, there are some economists, Sherry, who are generally worried about the lagged effect of monetary policy. They're looking at things like leveraged corporate debt buildup, et cetera. But I'd say for the most part, people are saying a pause for how long, wondering if they will the hike rate. Not too many calls from economists for that cut just yet. Donald Trump on Friday, just hours after the jobs report was released, he's getting ready to hop on a helicopter and a plane and go out to look at the wall. But meanwhile, asked a lot of questions about the economy, asked about the Fed, and he had something rather surprising to say. He wants the Fed to buy bonds again. Let's listen.
The Fed should drop rates. I think they really slowed us down. There's no inflation. I would say in terms of quantitative tightening, it should actually now be quantitative easing.
And of course, Stephen Moore, who the president has really tapped now to potentially be the next one of the next Fed governors, has already called for the Fed to hike rates 50 basis points. It's not like it's not in the conversation at the White House. And Larry Kudlow, a former Wall Street economist, the chief White House economic advisor on Bloomberg television, seemed to say as well, maybe a little bit more gently than Trump, but still, it wouldn't hurt if the Fed moved.
Looking at the yield curve and other market-based measures, I think on their time, the Fed is independent. I want to emphasize that. The Fed is independent. But the president has said, and I concur, that I think that we could do at some point with some reductions in the Fed's target rate.
And we did have a brief inversion of the yield curve. That's a very powerful signaler, usually, of a recession coming. Not inverted now. Nevertheless, let's jump into the Bloomberg and look at world interest rate projections. And this is the line of looking at the probability of a cut this year. And as you see, as we get through the year, when you get to the end, more than 50%, that's the bet that there's a chance of an actual rate cut. So that's what the bond market is saying. Bond market thinks if the economy doesn't get stronger, if inflation doesn't start rising, not only will the Fed have to just sit tight and wait, they may actually have to cut that key rate.
So what is the scenario that the jobs report actually supports then? A rate cut, no change, eventual hike, just Goldilocks conditions throughout the course of the year?
I think it depends on which part of the jobs report you look at, Heidi. For example, let's jump into the Bloomberg for another look at some bars and lines that get a pretty clear picture, because payrolls were very weak in February, over 300,000 in January, but then they were up just 33,000. That was a little bit of revision higher, but that's meager. That's like almost statistically insignificant. Now, 196,000. They beat the forecast of 176,000, so a sigh of relief. This looks like a fluke. This looks more like where we are. Wages, however, year over year, average hourly earnings, this white line down here, was up to 3.4, looking good. Well, it's back down to 3.2. Not a disaster, but maybe losing some steam. And of course, wage gains are very important because the Fed wants to get its inflation rate up to that 2% target. If wages start to pull back, maybe that makes it just a little bit harder. Let's look at one more chart from the Bloomberg now, because I really like this one. You've got unemployment near a 49-year low at 3.8%, keeps bouncing around down there. So that means a real tight labor market, doesn't it? And you have average hourly earnings. They've pulled back a bit, but still, you know, you can see they've been moving up. But the core PCE, Fed's key gauge, here's 2%, here's 1.8%. It's had a hard time getting up to 2% and staying there. And this is one more reason, I think, why people figure that the Fed may not be ready to cut rates. But as long as inflation's that much below target, if it's not sustainably above 2%, Heidi, as Jay Powell has said he would like to see it, Fed's not going to be ready to hike rates either.